everyone, welcome. You have tuned into Market Cafe on ET Now. I'm Shrishti Sharma and with me Shreyansi. And Shreyansi, very good morning to you. Let's get started for today's trading session. Let's start preparing for that at least. And firstly, give us what's the sense we are getting from the global and especially what happened overnight in the US markets?
Well, absolutely. You do have some strength returning to the market as far as the market is concerned, barring Dow. Largely, that's the kind of move that you've seen come in at this point at least. When you take a look at the beleaguered tech stocks, you did see them catching a bid as investors snapped up those shares. So when I'm looking at the Nasdaq composite, there's a 1.2% gain there. You do have the S&P 500 as well that has a 0.5% advance coming in. But like I mentioned, Dow's the one that lagged behind just a tad bit. So when you take a look at Dow, that was the outlier, notching a third straight losing day, falling 0.2% as well. So that largely is the kind of move that you have coming in. The tech sector, of course, was the top performer, up nearly 1.6%. You do have Nvidia and Palantir Technologies. Those are the names to look at. From within that entire pack, when you take a look at what else was happening in the market, of course, you do have February's reading of the consumer price index. That's a wide-ranging measure of costs across the US economy that we've been waiting out for. Came in softer than expected. Headline inflation, in fact, also rose just about 0.2% from the prior month, 2.8% when you're looking at it on an annual basis as well. That largely is the kind of handover that you're looking at. But of course, you have to look at the week-to-date handover as well as far as all the three major averages are concerned. You do have them being on pace for steep declines. So when the S&P 500 and Nasdaq are concerned, you have a 3% loss coming in for both of these indices largely. And Dow is, of course, off 3.4% for this particular period as well. So largely, that's the kind of handover that you have, at least as far as Wall Street is concerned. But tell us about oil, Srishti.
Well, talking about oil, we have seen a bit of a surge coming in on that particular commodity. Well, of course, yesterday we had the OPEC retaining the growth view for the oil demand in 2025 as well as 2026 that tried to send some bit of a support to the crude oil prices because WTI as well as Brent crude, they both gained over 2% in trade yesterday, and Brent oil was again seen to be above that $70 per barrel mark. Other than that, it was the weaker dollar as well, helping the rally in the fuel. So all in all, a good crude move is what we have seen in yesterday's trading session, Shansi.
Well, absolutely. But with that in mind, let's also look ahead at the cues that we should be watching out for. When you take a look at the US, you do have PPI as well as initial jobless claims data that we're watching out for. Other than that, Eurozone, you do have the industrial production data, in fact. And in terms of cues from India, you do have the weekly Nifty expiry. Something to watch out for. Other than that, global earnings front, you do have generally that you should be focusing in on, as you can see on your screens as well. But largely, those were the cues that we're looking at this morning.
But certainly the big headline this morning is Consumer Price Index in United States that eased in February when prices for goods and services moved up less than expected, providing some relief as consumers and businesses worry about the looming impact of tariffs might have on inflation. Prices ticked up a seasonally adjusted 0.2% for the month, putting the annual inflation rate at 2.8%. Meanwhile, the core CPI also rose 0.2% on the month, as was at 3.1% on a 12-month basis, the lowest reading since April 2021.
Alright, then moving on, let's get to some more news and updates from stateside. Then the US debt and deficit problem has worsened during Trump's first month in the Oval Office as the budget shortfall for February passed the $1 trillion mark for a year-to-date record. In fact, the government spending has eased slightly on a monthly basis, although it is still far outpacing the revenue.
Alright, but just hours after 25% duties on US steel and aluminium imports took effect, Trump has once again threatened to escalate the global trade war with further tariffs on European Union and Canada. This comes after the European Union announced counter tariffs on US goods worth over $28 billion.
Alright, then moving on, meanwhile, you do have a former Treasury Secretary, Stephen Mnuchin, who said that he believes that people are overreacting to the policy changes by the Trump administration. In fact, he also added that he does not see signs of an imminent slowdown as far as the US economy is concerned. Also addressed the recent pullback as far as the stock market is concerned, pointing out that the declines have come from high levels and the ongoing slump is just another healthy correction.
Alright, but for this fears, it's now time to slip into a very short break. Don't go anywhere. We'll be right back with more stories and updates on the other side. Welcome back to Market Cafe right here on ET Now, and let's also tell you what the Asian markets are up to this morning. And we are getting a bit of a mixed cues because it's Nikkei that is holding on to the gains of 0.7%. Other than that, it's Kospi which is down a bit in trade right now. It's a bit of a red tinge that you are seeing on the screen. It's 0.6% decline coming in on that particular index. While it comes to Shanghai as well as Hang Seng, they're absolutely doing nothing in trade right now. So nothing much to read into, because do remember that the global handover even from the US markets were a bit of a mixed bag because Dow Jones did decline, but other than that Nasdaq and S&P did try to lend some support. But back home, let's also take a sense that what GIFT Nifty is doing on the top of your screen. You see it's a bit of a green shade that we are seeing. Almost 36 points of gain is what GIFT Nifty is implying right now, because do remember back home we're going to be reacting to the CPI numbers as well. So that is the key trigger, and this is going to be a truncated week as we head towards the long weekend. So today that will be an interesting day, whether or not we see some positionings unwinding or changing their hands. So let's watch out for that. But for now, the picture looks quite decent. GIFT Nifty is implying an open in the green as we speak.
Welcome back. Thank you so much for staying tuned into Market Cafe. Let's get you some more news and updates then, and let's take a look at some macroeconomic data coming in then. India's inflation dial just takes a breather at this point. February CPI inflation has eased to a 7-month low of 3.61%, slipping comfortably below the RBI's 4% medium-term target for the first time since August 2024. So that's a sharp drop from 4.31% in January, with food inflation also leading the cool down to 3.75% from 5.97%. Now, this is thanks largely to tumbling vegetable prices, but it's not all soft data. Core inflation, that's the one that edged up to 4.05% from 3.76% previously, signaling underlying price pressures. When it comes to the non-food sectors, meanwhile, you also do have the India's industrial output that is flexing its muscles, climbing to 5% year-on-year in January, as well as a solid jump from 3.2% in December 2024. Now, with inflation cooling and growth picking up, does this really set the stage for a policy rethink when it comes to the RBI? We got the word coming in from Saugata Bhattacharya, who's a member of the Monetary Policy Committee, Indranil Pan, Chief Economist at Yes Bank, and Gaurav Sen Gupta as well, Chief Economist at IDFC First Bank. Let's go across and listen in to what the experts then had to say.
The FY25 numbers are likely to be lower than the initial estimate, the NSO estimate, from whatever nowcast numbers, the high frequency indicators, etc. So given this, I'm not going to predict the next rate move, but certainly it seems that the inflation path that we are seeing and we are likely to see for the next few months, despite all the risks on the horizon. I mean, imported inflation, a warm summer, hot summer, etc. So all these issues coming in. I think the inflation path probably opens up more space for additional easing. And given the fact that we are still below 6.5% growth, I think that also opens up, which is probably close to the potential output that we have now. So I think the economy can absorb some more stimulus without the risk of overheating with inflation again beginning to pick up. So I think, the growth inflation trajectory trade-off at this point in time looks favorable for further easing.
The comfort comes from food, no doubt about it. The comfort definitely does not come from non-food. And given the comfort from food, one may be slightly more confident of the consumption pattern going forward, given the fact that higher food inflation in India, given that there is a significant sort of bias in terms of the overall budgets of the Indian population, more skewed towards food, at least for a certain significant section of the population. There can be some benefits of lower food prices on discretionary consumption items. And therefore, we might actually see core inflation not falling in the medium term. It will be mostly sort of the food that will determine the course of inflation going forward.
We are seeing, if you look at other indicators, a clear pickup in rural demand, which is got supported by the fact that the Rabi as well as Kharif crop output this year is going to be stronger. The urban side, at least in our assessment, at least in the month Q4, Q3, Q4, there is a pickup, but it's not as strong as rural side. And in terms of industrial activity, IIP is showing some pickup, but other indicators did show some softness. For example, you had the PMI manufacturing, which came a bit softer. Electricity demand has moderated a bit, but again, it's been a little bit mixed on the industrial activity. But overall, if you take into account all growth indicators, there is a pickup in rural demand as well as some improvement even on infrastructure. This is because government, both center as well as state government, their capital expenditure has actually picked up. But for the overall, in terms of growth implications, we still see FY25 GDP at around 6.3%.
All right, moving on to another story wherein high-speed internet beaming down from space sounds futuristic, right? Well, it's about to become a reality. Like we have been discussing on this very show, Elon Musk Starlink is gearing up to make its India debut, and it's not coming alone. Airtel and Jio have jumped on board to bring this satellite power revolution to millions. But here's the big question. Can Musk crack the code of India's price-sensitive telecom market, or will Starlink remain a starry-eyed dream? Let's break it down. My colleague Sumit has put together this report that explains the advent of satellite internet connectivity in India.
Starlink is one among many feathers in the hat of Elon Musk, the maverick American billionaire. Starlink is touted as a transformational technology that aims to offer high-speed internet in more than 100 countries. And India would soon be its latest destination. Bharti Airtel and Reliance Jio, the only two major Indian telecom players, will partner with Starlink to expand their broadband services. In return, Starlink will get access to one of the biggest and fastest growing markets in the world. The collaboration seeks to leverage extensive mobile network of Indian companies and Starlink's satellite technology to ensure internet access, including in rural areas. The deal at the moment is subject to SpaceX gaining approval from Indian authorities. According to the deal, Bharti Airtel and Reliance Jio will make Starlink's solution available at their retail outlets and online stores and establish a mechanism to support customer service installation and activation. But what exactly is Starlink network that claims to be world's first and largest satellite internet provider? In simple terms, Starlink, a SpaceX initiative, uses a constellation of low Earth orbit satellites to provide high-speed internet services by creating a global broadband network. Starlink provides unlimited high-speed internet via a network of small satellites, delivering speeds of up to 220 Mbps. SpaceX plans to double these speeds in near future. Technically speaking, Starlink is a satellite internet constellation that uses satellites present in Earth's orbit to offer global mobile broadband. In other words, ground stations send signals to satellites in orbit, which then relay the data back to the users on the Earth. The system uses satellites that can weigh around 600 kilograms and orbit 500 kilometers above Earth. This system can also provide services in rural and geographically isolated areas where internet connectivity is unreliable or non-existent. This is Elon Musk's moment in the sun, as Tesla and Starlink are set to enter India. But at the end of the day, the success of these products will depend on one crucial factor. Can the world's richest man understand the pulse of price-sensitive Indian consumers?
Alright, then moving on. So is Starlink's India entry a game changer or a monopoly threat then? Is it a boon for innovation or a monopoly in the making? We put the big questions to InSpace chairman Pawan Goenka, and he's quite clear that Starlink will supercharge India's space ecosystem, not stifle it. Let's go across and listen into what he had to say.
If you look at all the government initiatives to support startups outside of space, there's a lot of money the government has put on the table, right? We have taken 1,000 crore specifically for space. That doesn't mean that's the full sort of expenditure government is doing. And the space startups can also tap into the other deep tech fund that government has already announced. So this 1,000 crore doesn't become like a limit. And we also expect the 1,000 crore will be a multiplier. And once the government invests in a certain company, then private sector investors may also think about investing in the same company. So 1,000 may become 2,000, 3,000, 4,000, depending on what kind of leverage that happens. I think to the best of my knowledge, Starlink does that in many countries that they go in, where they tie up with a local telecom service provider and work with them as partners. So I don't know the extent of partnership. I don't know what will be done by Airtel, Jio, what will be done by Starlink themselves, whether Starlink will run independently and still allow Airtel, Jio. I really don't know any of those things.
But what kind of a boost do you think the entry of Starlink in India will give to the overall SATCOM ecosystem?
Well, see, look, we have done projection of SATCOM capacity requirement for the future. And we do need a lot more capacity than what we have today and what's in the horizon. And therefore, Starlink coming in will meet the future requirements, or anybody else. Starlink is one of the 4 operators who are looking at coming in and providing SATCOM services, and they will fill the need that we have in the industry. And we, from our part in space, be careful that we do not starve in terms of capacity and do not do an overdose of capacity. We have to keep the right balance so that we don't get into too much excess capacity that is unused.
All right, moving on. Let's talk about the railway space then, because Indian Railway is aiming to transform intra-city travel, and now taking inspiration from Mumbai AC locals, they will also be adding, that will also be actually added to Kolkata routes. Sameer Dikshit is here with all the exclusive details. Take it away, Sameer.
Railways has a mega focus to transform the local train experience, and in the same direction, Railways is planning to run AC local train in Kolkata. After Mumbai, now 2 such AC local train will be running on Kolkata tracks, and soon this will be green flagged by the Union Railway Minister Ashwini Vaishnav. But why so much push on AC local? First is that the Railway wants to improve the reliability, the safety, and also the overall experience of the train travel, and where AC local train can play a game changer role. So such AC local train will be running on tracks. In the initial phase, first 2 AC local trains will be flagged off, and then based on the feedback, more such trains will be inducted in the entire network. So this AC local train, which has been manufactured by Integral Coach Factory Chennai, has got many facilities. For example, it has been built on the similar lines of Vande Bharat train. It has got a CCTV camera, emergency talkback unit. The entire coach is closely monitored through the live monitoring of CCTV footage and the safety or the automatic door system. So these all features are there, and it has got a sitting capacity of 1,118 numbers. So these all features are there. Talking about the fare part, so slightly the fare will be upward than the existing non-AC train, but the railway understand that they are going to be very conscious when they want to make these AC train more successful. It has been observed that the Mumbai AC local train has not generated the enough good response for railways, and that is why they are very cautious that when it comes to Kolkata, they can at least have a very positive and enthusiastic feedback. So such trains, AC local train, will be running on Kolkata tracks very soon, and based on feedback, railways is looking to expand the numbers of these AC local train, not just in Kolkata but other cities as well.
All right, thanks Sameer for getting us all of those important details. Time now for a very quick breather on the show. When we come back, we'll get you more news and updates, so don't go anywhere. Welcome back. Still watching Market Cafe on ET now. Let's get to the futures and options roundup now. In fact, Ansh is standing by with just that. Ansh, over to you.
Starting with Nifty first, Nifty gave a good recovery of day's low, but then it still closed slightly in red, taking stiff resistance at that 22,600 mark. Also, if you can see in chart, then Nifty actually have been taking strong resistance at around that 22,600 to 22,800 zone from last 5 consecutive sessions. Also, on option front, we are seeing that even option traders are agreeing with this 22,600 mark, as we are seeing very active call writing happening at this strike price, indicating option traders are expecting strong resistance around this level. Now, if you talk about Nifty Bank, then Nifty Bank has actually snapped its 3-session losing streak. But if you see on chart, then it has been consolidating within a tight 1,000-point range from last 12 consecutive sessions. This range is 47,800 to 48,800 mark. In index future, we are seeing open interest has gone down by around 0.6%, indicating short covering, which is a bit of positive sign. Now, if we see index future positioning, then in previous session, FI have actually covered their long by around 600 contract. They have added shorts by around 3,800 contract. So net to net basis, we are seeing addition of around 4,500 contracts on downside, due to which the total long position has slipped lower from 18.3% to 17.9%. On flip side, if we check retail's position, then they have been bullish because they have added longs by around 2,400 contract. At the same time, they have covered their shorts as well by 3,600 contract, due to which we are seeing net addition of around 6,000 contract, due to which the long position has gone up from 68.5% to 69.4%. So in previous session, retail traders seems to be getting positive, but FII seems to be getting cautious in the market.
All right, thank you so much, Ansh, for getting us the details, what's been happening within the F&O space and what kind of a data build-up we are witnessing. But other than that, which are the stocks that are going to be in focus today? Let's get in that list, and Varun is standing by with that. Good morning, Varun. Over to you.
Good morning, Srishti. So let me start with Coromandel International, because the company would be acquiring 53% stake in NACL Industries for a consideration of around 820 crores. And the per share value is around 76.7 rupees per share. And after this, the company would be making an open offer for additional 20% stake. Bharat Electronics, the company has received 2,463 crores orders from Indian Air Force. And after this order, the cumulative order for FY25 has reached around 17,030 crores. NTPC Green, the company's arm completes commissioning of 105 megawatt of solar projects in Madhya Pradesh. BML, the company has signed MOU with Siemens for semi-high speed and suburban passenger train segments, as well as metro and commuter rail markets. ICICI Securities, the company, the stock actually would stop trading from 24th of March. It would be suspended from 24th of March. And lastly, keep an eye on Polycab, because the company has entered into an agreement of around 3,000 crores with BSNL for Bharat Net project.
Thanks, Varun, for that list coming along. Then those are the list of stocks that you should be watching out for bright and early this morning. But let's get you some important commentary then. Top global voices, in fact, remain bullish when it comes to India. So when you take a look at some of the commentary, Chris Wood calls India the best structural story. You do have Jim Walker also saying that policy stability is going to be making it a standout time to double down. Florian Neto also sees India's fiscal path as strong, but finds Smith's pricey. Let's get you their commentary coming in. As far as the US dollar is concerned, India's position is concerned, and even as far as what they had to say when it comes to India's top big bets. Let's go across and listen in.
Given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the nearest. Well, they have been outperforming year to date, and they can do so more, I would say, are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings. And although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious.
The state of policy generally, so monetary policy, fiscal policy, and exchange rate policy. India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability. You know, I've said to clients this week that this is the time to absolutely double down on the long on India, go much, much longer. And although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off from here, and those valuations will be very quickly supported by corporate earnings and by economic growth.
We do feel that the valuations that we are seeing on mid-cap is still a bit expensive compared to what we are seeing from an earning revision ratio on the market. Of course, you can selectively find some stocks, but in general, we do feel that now on the large cap, most of the resit on the valuation has been happening already. The Chinese rally is a tactical rally for now, in our view, but it can become more sustainable. So the question is on the leadership. And we do feel okay having an overweight on India and an overweight on China today in our portfolio. The overweight on China is not sustainable yet, and earnings there is not good enough yet. Okay. So there is good prospect for Chinese companies to deliver more because the business environment is evolving.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future.
Base case for now is that the same thing will happen as happened in 2016. That is that the dollar peaked when Donald Trump entered the White House. That's what happened in the first Trump administration. That's my base case today. It's also a reality that Donald Trump doesn't want a strong dollar. So that's my base case. So I'm hoping that the tariffs do not prove to be as big a deal as currently threatened. But if I'm wrong on that, the tariffs in the short term will be inflationary. In the longer term, they'll be negative for growth.
I mean, that's exactly the kind of range that I would be looking at when we look at past recessions in the US and slowdowns in the US. 10 to 15% on the dollar as a correction is not at all unusual. And that's really been our forecast, unfortunately, too long, that there was going to be a slowdown in the US and there would be a significant dollar correction before that slowdown really materializes. But I think, yeah, we could easily see a 10% correction and then a bit more in the US dollar over the course of the next 9 months or so.
You may see that the euro has been moving 5% already, appreciating. The yen as well have been moving 10% over the last 3 months. So the dollar has been depreciating in trade weighting terms, but not versus some specific EM currencies. Second point, we are strong believer, and it's part of our outlook for this year, that the US performance, the way the design of it was not sustainable. It was too concentrated, lower breadth, and indeed those stocks, those Max 7 stocks, deserve to perform well because they have been having strong guidance, strong earnings, high bar, and they have been matching the bar or exceeding the bar. But we do believe now that the S&P will perform less than other markets because S&P the performance should broaden to other stocks and other sectors.
For the long end of the yield curve in the United States, we'd be a little bit more cautious on the long end of the yield curve than we've started the year.
Can you break long end for our viewers? What does long end mean?
Sure. So if you're thinking about sort of 10-year and beyond maturities, we would see, because we've seen a material sort of decline in yields more recently, we think that when we get towards the end of the year and beyond, we will see yields at the long end having some upward pressure. Because if you take into account all of the story that we're talking about, yes, there's more growth concerns in the near run in the US than there were at the start of the year. But at the same time, the inflationary pressure and the backdrop that we've been talking about isn't going to go away anytime soon.
I would personally be looking to buy property stocks. The biggest near-term risk is what I said earlier, is foreign selling's already been large. If Wall Street's correcting, that's going to mean there's no hurry to buy India. But for somebody who doesn't own any Indian stocks, this is obviously a very good opportunity. So it's all a question of how you're already positioned. I think the bank stocks are much less high beta clearly than the property stocks, and they are they're much less risky, and they will be in my view. If the market's declining, I would expect the bank stocks to outperform. A straightforward story to invest in India. It was already straightforward, remains straightforward. Is anything to do with travel?
If we were looking at government bonds, then, believe it or not, I'm going to say India again, because again, the note that we put out yesterday is looking for 75 to 100 basis points cuts in Reserve Bank repo rate, a 3-year view in particular. One of the other longs that we've got in our portfolio is Vietnam. And I know it's a small country and it's kind of off most people's radar screens, but the politics in Vietnam and the growth and economic dynamics there all suggest that over the course of the next 2 to 3 years, there's going to be a very strong acceleration.
We have another weight on European equities. Okay. We have another weight on India equities. And we have now a tactical overweight on China equities. Okay. So this is how we are rebalancing a bit our overweight of the US that we have been having for a long time. And we are coming back neutral on the US. Then on the fixed income side, we are positive on duration. Okay. And we have been positive on duration. Today, on the curve in the US, we do feel that a lot is priced in. We have 3 cuts in our central scenario. We are now priced in for 3 cuts. And we do think that the US growth scare is temporary. And we remain very positive on credit, on IG credit. Even if you don't have a lot to make there, we're still positive because we don't think the issue in terms of leverage and into issue in terms of profitability. So as soon as the Fed may stop there and cut sporadically going forward, but the financial condition will keep on being a bit more accommodated.
2 points there. So firstly, I think financials, there is an opportunity that would exist here. The sizable chunk of the overall market that is financials, the fact that liquidity dynamics are easing, maybe there's greater credit provision as a result of those liquidity. Which companies can best tap into those structural mega forces that are arising? And as I've said already, some of those are to do with that AI transformation, right? As a result of that, I think maybe some of the big winners 5 years out, we don't even know about today. And that's just the nature of the fact that the market is rapidly evolving. So today, I would say yes, financials, but let's be open-eyed to the fact that the winners of the future when it comes to the adoption phase of AI, we might not even know who they are today.
All right, but with this, viewers, it's time's up in this edition of Market Cafe. It's a goodbye from me and Shreyansi as the whole team who put the show together. Thanks so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.